Our next guests are Cameron and Tyler Winklevoss. They kind of need no introduction, but I'll do it anyway. They are the heads of Gemini, which is a crypto exchange based in New York. Sort of a competitor to Coinbase. Many of you guys may know them as my co-founders at ConnectU, which was a Facebook predecessor. But I think most importantly, they were super early on the Bitcoin train and are still on it. Really since day one. So there's a ton to talk about. Guys, welcome to the SumZero Virtual Summit. You'll want to unmute yourselves. I think you guys are both on mute still.
Yep.
Hey,
okay,
Divya.
awesome. There
Thanks
we
for
go.
having us.
Great to see you guys. No, great to have you guys on. It's been quite a roller coaster ride. I think we can all agree to that. Really, I think at the end of 2021, when Jerome Powell decided to start hiking interest rates, was sort of the start of it, and then you've got this war in Ukraine, kind of from early 2022. But 2022 was a really tough year for technology as a sector, and crypto kind of being a subsector of tech. Sort of felt that sort of pain as well. And now, of course, things have started to stabilize and turn around. So just wanted to get your thoughts on a couple things. First off, I guess most recently there's been an ETF approval for Bitcoin, probably the biggest news in the sector, and likely responsible for a lot of the price movement recently that we've seen back, in the crypto market, certainly with Bitcoin specifically. But can you guys just talk about like the significance of that milestone and what it means for both Bitcoin and some of the other digital assets in the space?
Sure. Go for it, Tyler.
No. As you can see, we're twins. We're literally saying the same thing at the same time. But it's really a huge milestone for Bitcoin and crypto, because it really opens up the floodgates and connects traditional finance to crypto in a way that's never happened before. So we co-founded Gemini back in 2015 when we launched, or 2014, but we launched in 2015. And you can open up an account and hold Bitcoin itself. But a lot of people can't do that. A lot of investors, a lot of the deepest pockets, they need a securitized wrapper of it. Whether you have a 401k or your pension fund, you may not be able to open up an account at Gemini and actually buy Bitcoin itself, just like you may not be able to hold a bar of gold, but you can hold a gold ETF. And so it's really that plumbing between crypto or Bitcoin and traditional finance that is so significant about this milestone. And Cameron and I filed for a Bitcoin application back in 2013. So this has been about 10 years in the making. And it's definitely a really significant moment.
Yeah, so I think it's about, yes, it's 10 years in the making. And basically we view like pre-ETF Bitcoin as like pre-IPO Bitcoin. And that's how we were thinking about it. And now all of a sudden you sort of have this IPO of sorts and this connection to traditional finance. And the people who are going to be buying these ETFs or who have started to buy them are likely people who cannot go direct to an exchange. They need to do it through, as Tyler mentioned, a security wrapper, like an ETF. And so they're doing it through a retirement account or their account at BlackRock. And so this is bringing new money into crypto and very large money, and it's going to just keep accumulating because as I think we all know, people buy ETFs, they don't generally sell them. So it's basically just going to be a accumulation and hodl from here on out. And the inflows, I think it's been a couple of weeks. The inflows, I think BlackRock crossed about 3 billion already, which is a huge success for an early ETF. I think it's broken a lot of records, and there's a number of other people who have accumulated. I think Fidelity has accumulated over $1 billion, and then there's ARK and a couple other players like Van Eck who have accumulated hundreds of millions. But the inflows are really interesting because more is coming into these ETFs than Bitcoin is being mined. So every 10 minutes, there's a block reward, and the winner, the miner, gets newly minted Bitcoin. And these inflows are now outpacing the block reward, the newly minted Bitcoin, every day. And so I think that's a tremendous catalyst leading into the halvening, where the block reward will cut in half again. That's how the supply cycle of Bitcoin works. Every 4 years, the amount of newly minted Bitcoin per 10 minutes is cut in half. So we have this really large catalyst that is now basically taking more Bitcoin off the market than is being created on a daily basis. And then the amount that's being created will cut in half around, I think, sometime in April or May. And so we've never gone into a halvening. Like historically, halvenings have been huge price catalysts because it just reduces the supply being minted every 10 minutes. We've never had ETF flows that are basically purchasing more than it's being minted. So I think this could be a very interesting, I think it's going to be a super cycle as we pass through the halvening. And so this is, I think, very bullish. There's basically a run up to $50,000 Bitcoin with anticipation of the approvals. There was a fade down to about 40 because I think about $6 billion left the Grayscale ETF. They have higher fees, and there's people stuck in that product that could not redeem. They've since redeemed. That sort of worked its way through the market, and now we're back at to 45 because I think that just the simple reality is that people are buying more than being created. And Bitcoin, I think, we liken it to digital gold. If you look at the properties, Bitcoin really has the properties of an emergent store of value. And there's no commodity in the universe where the supply does not expand with demand. Even gold, as demand increases, then people will go mine for more gold. They'll build better technology, or it'll make sense to look for gold in certain areas that otherwise wouldn't be viable at certain price points. As the Bitcoin price goes up, there's no expansion in the supply. It is truly fixed at 21 million Bitcoin. And I think it actually takes people a while to wrap their head around it. But I think once you see that the supply is not expanding, the inflows now are overtaking the amount being minted on a daily basis. I think it's going to be a very, very interesting 24 to 36 months ahead of us.
Mm-hmm. Do you think that supply demand imbalance is sustainable?
I do, because a number of the large a number of the large asset managers haven't turned ETFs on yet in their platform. I think there's usually they require like a couple of months to sort of make sure everything gets ironed out. They do their diligence. So I think while BlackRock, for example, has Bitcoin in their models, and people who are on that platform can allocate to Bitcoin now, or people who are at Fidelity, for example, there's still a number of large players who are not offering to their customers yet. So we're really just at the beginning. We're weeks into it, and some of the biggest hoses, so to speak, haven't turned on. So I do think that the accumulation in these ETFs is only going to ramp up a lot more.
Mm-hmm. Yeah, one metaphor I like to use a little bit about the Bitcoin ETFs, it's sort of like if you were in consumer packaged goods. If you had a good and you got into Walmart, that's a really big deal. That can kind of make your business. If you get onto an end cap, or you get up close to the real estate near the register, it usually can make a company. And I think that right now, to sort of extend that metaphor, is that you're not in every Walmart yet. Maybe you're in 10 or 100. It's just a distribution solution. And so, like in many ways, Bitcoin is now like on the platform, or it's starting to be. And for asset allocators, it's becoming, a toggle switch, and that's a pretty big deal.
Yeah, one anecdote or this is kind of an interesting data point. We were looking at potentially investing in Bitcoin, but the bank that we were talking to said that if we wanted to do that, we'd have to hold it was like some crazy amount in reserves,
Right.
which sort of made it uneconomic to own the Bitcoin at all. And this circumvents that problem entirely. So it's a huge bottleneck that's been removed. Cameron, you mentioned, there's a lot of demand that hasn't quite turned on yet, because it sounds like certain maybe financial advisory shops or similar institutions need a certain grace period before they can actually buy these ETFs. Can you dive into that a little bit further? I mean, are there certain institutions that you know of that have demand for it, but are just waiting in the wings, that you can speak to? Or I'm just curious what the sort of how that would play out.
I don't know specifics, but what I've heard, I think places like Wells Fargo, I'm not sure if JP Morgan has any ETFs on their platform, or Morgan Stanley.
The private banks.
Yeah, there's some, I still think there's a lot of large private banks and platforms that haven't put them on yet. And part of it, it's just, I think their policy is that they just don't put things on unless they've had a certain, time in the market, so to speak. And then there will be one or two platforms that probably won't do it. It will take like a year or two, or they're just not, they're against Bitcoin for whatever reason. But I do think that we're going to see, like, the ETF folks that I've spoken with say that usually there's about 2 to 3 months lag between launch of new product and then getting the ETFs onto their platforms. There's some who are obviously there, like Fidelity's there, BlackRock's there, and I'm sure there's a few others. But we are seeing just the beginning of Bitcoin being platformed, so to speak.
So now, now that this sort of hurdle has been crossed, what is maybe what do you think is the time frame before there's an Ethereum ETF or ETFs for other digital assets? Do you think it's years out or months out, or?
In theory, it should be. I think Ethereum should be months out, because it's a commodity, and so once if you create a rule set for basically digital assets that are commodities, and I think anything that fits within that framework should be viable for an ETF. Of course, the SEC, I'm sure, can come up with reasons why they can try and delay, but I do think that Ethereum is more of a when, not an if. So do we see that in 2024? I think likely. The bellwether usually is who's filed applications, and I think BlackRock's already filed one, and a lot of the big players have already filed them. So they likely feel confident that they can run the similar playbook to Bitcoin with Ethereum. So I think it's definitely not going to be 10 years like Bitcoin. I think it'll probably be within the next 12 months or so.
And I think there's an important distinction to be made. Whereas the SEC, I believe, does not consider Ether, which is the coin of the Ethereum network, a security. So they group it as a commodity like Bitcoin. So I think that given the fact that they greenlit a Bitcoin ETF and they consider Bitcoin a commodity and Ether a commodity, Ether could be a fast follower. It could happen sometime this year. I think I read a headline or some report where someone said or predicted that it would happen in 2024. The question is, an ETF for a a cryptocurrency that the SEC does not deem to be a commodity, like let's say Ripple. I think that could be a longer story. But Ether, I would be pretty bullish that we could see an ETF for that sooner rather than later. The question is that when you step outside of Bitcoin and Ether, what would the timeline be for Zcash, for Ripple? And Zcash is a fork of Bitcoin, so there may be a better argument that it is a commodity, or an easier argument. So we'll sort of see how that all plays out. And obviously, a new commission could take a different posture towards some of these other cryptos outside of Bitcoin and Ether. Certainly, the courts are. Yeah. They're saying that not all cryptos are securities, and the SEC is losing a lot of those battles, the Ripple case, and whatnot. And my prediction is that they will continue to lose these battles where they try and square peg into a round hole cryptos into securities frameworks that is now almost 80 years old.
Yeah, I think that's fair. So one of the things that I noticed, and maybe this is sort of like to be expected, but there's been a huge amount of dispersion now between Bitcoin, Ethereum, and like kind of everything else. And, so on the way down, like, as hard as it was for, I think, Bitcoin and Ethereum holders to like, let's say, own Bitcoin at 50 and watch it drop to 20, it was far worse for a lot of the altcoin holders that own stuff that maybe fell, 95% or more. Do you kind of see this market as kind of at some point developing beyond the top two coins? I mean, do you see like in the altcoin, kind of downstream of the big names, like any particular tokens that have like, real viability in terms of being liquid, sustainable tokens that aren't just like fads or, relics of the past? Like, which of these are going to have any kind of real staying power?
Yeah, so that's a great question. I mean, I think the short answer is yes. There will definitely be viable projects beyond Bitcoin and Ethereum, but there's going to be a lot of pets.com and projects that fail, or never really find that traction or killer use case. I think it's important to note, like, Bitcoin has found its killer use case. It's digital gold, and it's an inflation hedge. It's a disaster hedge. It's truly, a fixed store of value. And we wrote a thought piece a couple years back where we said, our belief is Bitcoin overtakes gold. It's just a matter of time, and it will likely do that within the next 5 to 10 years. And if you look at the gold market cap, the math's pretty easy. I think it's around 10 trillion. Bitcoin, I think will go up about 20, 25 times from where it is today to overtake gold. And it's a matter of time. And that's really all Bitcoin needs to do, is really just be a better gold, which it is. If you look at the properties, it's more portable, it's more divisible. You can't counterfeit it. It just sort of beats gold across the board. And if you talk to any millennial, like, or Gen Z, they don't want to own hardware. They want to own software. They live online. They grew up in a streaming world. And that's where they are. Ethereum is basically a decentralized virtual computer. So think of like this decentralized operating system where you can build decentralized apps on top of it. And it's already found tremendous market fit with decentralized finance, DeFi. There's decentralized exchanges, lending protocols, all kinds of different financial things being built on top of Ethereum. And it's basically re-architecting the traditional financial system in a permissionless, trustless way. And I think, how do you put a value on what will be the largest operating system in the world? I mean, if you had like iOS, Mac OS, Android, Linux, the major operating systems together, Microsoft, Windows, like that. Ethereum is that for builders. And will there be is there room for maybe one or two others? Possibly, because there are 2 to 3 major operating systems. I think people like variety, and there's trade-offs depending on how you build it. But there's not room for more than a few. And then I think that there's like Filecoin is an interesting project, decentralized file storage, and there will be like I think a lot of other utility tokens. And then of course there's stable coins. You look at Tether, it's I think got something like 80-90 billion dollars in stable coins, and I think their numbers, I think they made more last quarter in profit than Goldman Sachs. And so there's like a need there's a need for being able to send money or tokenized money.
And by the way, how did they? What was the source of that income? Like, what's the business model there for the company?
Sure, it's just interest on the underlying treasuries and assets that they hold. The dollars that back Tether are put into T-bills, and so that interest is in the billions of dollars. And so, but there's this huge need. People want money to move like email 24/7.
Yeah, who owns that stream?
Who owns the stream? The like revenue. I don't know the specifics, but I think there's a company and creator behind it, and so they're doing quite well. But another way to sort of think about it is Bitcoin, Ethereum, they're layer 1 tokens, and I think the power law will hold true there. But there's also things called layer 2 tokens that are built on top of Ethereum. So there's like a breadth, but there's also a depth or a height to the stack. So there's like L1s, there's L2s, there's bridges. A lot of like the future might be interoperability between these chains. But there's probably room for a few, because there's a trade-off between decentralization and throughput and speed. The more centralized you are, the more throughput and low latency you can be, but then you give up decentralization. And so it's this spectrum, and there's probably room for experimentation for a couple. Bitcoin's like the ultimate decentralized end of the spectrum. And then you have Ethereum, you have Solana, and there's going to be other experimentations. So it's probably going to look a little bit like fiat currencies. There's a couple big ones, there's 3 to 5 big ones, and the rest are kind of, not that interesting, or there's not that much liquidity or trading with them. And so I think you're going to see the power law, with L1s, but also with L2s, and really like they're going to rise and fall on the use case and the value they can present to the users. I don't know if it's too early to talk about the questions that have been asked, but I think another point that hits on a few of them is this idea of network effects and how powerful they are. Like, why can't all of us can go just fork Bitcoin right now and create Bitcoin SumZero? But we have to get the miners, the users, the entire network to come over and use it and adopt it. And network effects are really powerful. That's why it's been so hard for Google to break into social and go after Facebook, or that's why it's been very hard for Facebook Meta to go after Twitter. Network effects are so strong. And if you're good enough and you're first, you're usually the winner, and it's a winner take all. So they can throw all these resources at it, but the users actually don't want it. I don't want to post my pictures 10 different times, open up 10 different apps. So I'll fight against it for the companies. Like, I want to tweet one time to everyone, one to many. I don't want to have to go to Twitter and 10 other platforms. And I think that the network effects, and when you think about crypto and how to value it, it's important to think that these are networks, and to think about valuing them. It's not with a cash flow model, it's with Metcalfe's law, and the number of users, it exponentially squared. And so I think that that's the paradigm that at least we view this as. Obviously, we compare Bitcoin to gold and the money characteristics, and you look at the market cap of Bitcoin versus gold, and if it's gold 2.0, if it's gold that works like email, then it's going to disrupt the 10 trillion market cap of gold or whatever it is today. And Cameron and I, we actually wrote a thought piece a few years ago and said, okay, the back of the envelope math is that each Bitcoin will be worth at least 500K if Bitcoin disrupts gold, but Bitcoin's more than gold because it's this network, it's digital, and we can kind of go into we can go endlessly into that, but that's how we think about this.
Has your mix shifted at all in terms of your personal exposure to crypto? I mean, when you started out, you were like 100% Bitcoin. Have you seen developments of late that have made you pull some money out of Bitcoin into Ethereum or some of the other projects out there? And at a high level, what would you say is your overall allocation right now, if we were to put it into like three categories: Bitcoin, Ethereum, and then like other?
Mm-hmm.
Right.
Well, we started with Bitcoin because that's all there was initially. We were 100% Bitcoin. And then when Ethereum came out, we went and purchased a lot of Ethereum. And then I always view those as like the blue chips. They feel like Bitcoin's, they're obviously the two oldest. They've also gotten tremendous traction. They have huge developer communities. People often say, hey, what backs Bitcoin? I don't get it. Well, the US government's backed by the might of the US military. Well, Bitcoin is backed by the largest computer mining network on the planet. And Ethereum has a tremendous mining community as well. So but beyond that, Zcash is interesting. It has privacy features. A lot of people would argue that Bitcoin's too open. Filecoin, we were early investors in Filecoin. It's trying to create a decentralized storage network. But I think that if you're looking to cover most of your bases, a lot of people love to go out on the horizon and look at all these different projects, which is awesome if you have the time and interest. But I think you have a tremendous amount of your bases covered with Bitcoin and Ether. With ETFs now online, I think you probably want to be, pretty heavily weighted Bitcoin, but I think Ethereum, I'm not sure what the right breakdown is. It's 60-40, 70-30. I think Ethereum ETFs are also pretty close on the horizon. But with those two, as Tyler was talking earlier, there's a lot of tokens and layer twos built on top of Ethereum, and a lot of that value accrues to the underlying network. So by owning Ethereum, you are sort of indexing the projects built on top to some extent and getting some of that value. Solana is an Ethereum alternative. There's a lot of tokens being built on top of that as well. You can buy Solana and index a lot of that value with Solana.
Mm-hmm. Yeah, I would think about it a little bit in terms of what's your return risk appetite. So, Bitcoin, it's easy to see a 10x from here, from my point of view, maybe even much higher. Maybe it becomes the crypto global reserve currency. It unseats the dollar, so the sky's the limit, and people keep building on top of it. But if you really want those crazy 1000x venture returns, then you probably have to go out, more into the altcoin universe. So, but yeah, I think I would always start with Bitcoin. It's easy to understand. It's the oldest. It's blue chip. Bitcoin and Ethereum, like Cameron said, digital gold, digital compute. Get familiar there, and then you can always venture out. Broader.
Step back to your comment. Can we step back to your comment about the potential for it becoming a global reserve currency? What would be the steps that you think it would need to cross to get there?
Mm-hmm.
Is that the bull? That's kind of your sky's
that's
the
like
limit.
the super.
What's the basis of that is?
That's like the super bull case. It becomes the reserve currency. So what would it take to get there? Well, if we look at the current debt situation in the US, it's just completely unsustainable. as I think everybody on this call would agree with and knows. The interest payments alone are just staggering. And it seems like nobody has an appetite to rein it in, which is beyond irresponsible and disappointing. At some point, it's just going to defy credibility, and people are going to, not believe in the creditworthiness of the U.S. and the dollar, and the money printing and the overspending. So if that continues at its current pace, there will be some point in the future. But I think also a lot of countries are trying to create, break off from U.S. dollar trade settlement. I think there's the BRICS consortium and a couple others, and people are trying to basically wean themselves off the U.S. dollar. The problem is that most of the people in the U.S. government at the top positions still think that it's 1950, and we're post Marshall Plan, and the all basically international trade is settled with the U.S. dollar, and that just will continue because it will continue. And I don't think they really understand that that's not like a given necessarily, and that there's tremendous motivation for a lot of countries to basically not settle in the dollar. And while that still might be small percentage wise, there's still, it feels like it's moving in that direction. And if I think if the U.S. dollar and the U.S. government doesn't get their act together, I think you're going to see more and more countries like El Salvador being one of the first adopting Bitcoin as legal tender, or just failed countries.
And also, we might talk about what these countries hold on their balance sheet, right? Maybe traditionally they said dollars is safe, but with inflation and money printing and whatnot, and the soft defaulting of the dollar, maybe they start to say, let's put Bitcoin on our balance sheet. We've already seen that in a couple of countries. I believe El Salvador has done that. Argentina seems like a prime candidate, especially with their new president, Javier Milei. And so when countries start to hold Bitcoin on their balance sheet, their central banks start holding it, and then starting to settle trade with Bitcoin, then you can see a path towards unseating the dollar. And like Cameron mentioned, the only person who likes the dollar as a global reserve currency is the US, because it gives us this unfair advantage. And so a lot of countries don't like that, right? And the power that we can wield with it, whether it's economic sanctions or the cost of capital is so low for us to borrow. But ultimately, there are plenty of countries out there that would prefer no one to have it, especially not us. And Bitcoin could be that Switzerland in a way that could become the global reserve currency. So that could be a huge moment. We can't rule out that possibility.
Yeah, that's super interesting thinking about it from the standpoint of countries outside the U.S. Can you guys just rate Gary Gensler's performance so far? Just curious to get your thoughts on kind of his effort, like just his sort of emblematic of, I think, of a lot of the challenges that the industry faces. But I'd be curious to get your thoughts on him.
Yeah. So what's the scale of rating? 0 to 10?
1 to 10. Yeah.
Yeah, like negative.
Okay.
So where do we start? I think the SEC has not written a single rule or guidance for crypto. And they've totally talked out of both sides of the mouth. So he's been in front of Congress saying, I don't have the mandate to regulate crypto. And then 6 months later, a year later, he says, just kidding, every crypto is a security. Now you've got to comply with security laws, which makes no sense, because if you go to, and it says, go to this forum online and whatnot, but if you look at the forums, who is the CEO? Who is the board of directors? Well, Bitcoin doesn't have a CEO. It doesn't have a board of directors. So it's a hollow gesture. It's a disingenuous gesture, that this idea that that Ethereum can just walk in. Who is Ethereum? It's not one person. It's not a company. It's not a CEO. There's no board of directors. It's not a C corp. Can walk in and register. And so it's and they've used that excuse saying, oh, you haven't registered, which is an impossible thing to do. And because you haven't registered, we'll just sue you. And so it's been a regulation through enforcement posture, and it really hasn't been constructive because nobody knows what to do. You can't come in and register, and there's no guidance, there's no rulemaking, and their position is that everything is a security, which makes no sense. If securities can't be traded peer to peer, like I can't send you a security from my phone to your phone. And so that completely defeats and kills the purpose of crypto. And so there's been a real failure to understand that this is something very different. This is a new paradigm, and we need cooperation between regulators to help understand this and work with industry. And there's been no real collaboration. It's been, very much a hollow gesture. And just stepping back, it's really been all political, and we can kind of get into that, but it's been pretty bad for the crypto industry. They haven't stopped any of the frauds. They didn't catch FTX. They didn't catch Terra Luna, any of the blowups. They didn't prevent it, and their response was just to turn around and start suing all the good actors. And maybe stepping back just again, and we could spend hours talking about this, and certainly we've lived it, but the failure to greenlight a Bitcoin ETF created all of the problems and all of the frauds that we saw in 2022 and 2023. Because what it did is it pushed everyone offshore into the arms of players like FTX and whatnot, instead of it happening here. And so because the regulation was too draconian, it was walls, and you couldn't get anything done, companies left the US. And US investors left the US because they saw the opportunity over there, they couldn't get it here. And so I think it set the stage for all this bad behavior ultimately. I think if the Bitcoin ETF had been greenlit in 2018, I don't think you would have had FTX. I don't think you would have had a lot of these frauds, and US investors would have stayed on more regulated platforms because they could have gotten the opportunity, the coins, the products they wanted, as opposed to having to go offshore. It was a complete Wild West. So I think history will not be kind in the look back to the SEC. I think ultimately it will come down that the last decade, they were a failed regulator when it came to crypto, and understanding the future and being agile and working with companies to usher in that future. And what did they protect US investors from at the end of the day by not greenlighting a Bitcoin ETF 5-7 years ago? They protected them from Bitcoin, which was the best performing asset of the last decade and is showing to be the best performing asset of this decade. It's like preventing US investors from, a FANG company, from Tesla or whatnot, and Facebook. And so I'm not, as you can see, we're not view the SEC favorably, their track record.
Yeah, I mean, Tyler, you said it, you covered a lot of ground there, but I think that it's very clear, like the SEC is not a regulator of the future. They're clinging on to 80-year-old laws, and really refusing to update anything or get with the times. And I think that is just, they're really, the brand has been, I think, really damaged. And it's proven to be an incredibly political organization. The mandate is capital formation and investor protection. And that was my, impression of the SEC when we filed our first Bitcoin ETF in 2013. Like, this is a rigorous institution. They're being thoughtful about how to usher in new products and think through it. But what they've really proven is that it's just hyper political. And they didn't approve Bitcoin ETFs because they wanted to. They did it begrudgingly because they had to, because they lost the Grayscale court case. So even the ETFs, they still don't really want to greenlight them. And there's so many bizarre inconsistencies with their approach. For example, they let Coinbase become a publicly traded company, and then they sued them and said, "Hey, everything you're doing falls under our mandate, and you're operating illegally." Well,
2 years later.
Why did you approve their S1 2 years prior and allow them to go public if you had such an issue with how they're operating? And so I joke that, being sued by the SEC used to mean you probably did something wrong. Today, being sued by the SEC probably means you're doing something right. It means you're being innovative and you're trying to build new products and services and new, financial tools and access in the US. And, the track record is really abysmal. As Tyler mentioned, they haven't prevented any blow up. They just show up to the scene after the crime, say, "Oh, you're all guilty. You're in crypto. You're all guilty," by association. They haven't actually prevented anything. So we have to ask ourselves, like, as more and more regulations get added, like by the day, which makes it harder to build, harder to innovate, and harder to do business, at what point, is there a reset where you say, this is totally killing innovation? These institutions either have to modernize or be gutted and redone, because the track record is just abysmal. Anyway, we could go on for a long time on this topic.
Yeah.
No, I was going to ask, related to that, what does the upcoming presidential election mean for you guys in terms of how it could affect the industry from a regulatory standpoint?
Yeah, that's a good that is a very important question. I think that the hostility of the current administration and the SEC, and the leaders at various institutions against crypto, is really, if that switches, that's going to be a huge, benefit, obviously. And so I think, like, we have to continue to remember that, like, ETFs weren't approved because the SEC believes in the product. They had to. The SEC has been attacking regulated businesses like Gemini, like Coinbase, who have always operated within the spirit of the law. And it's just pure political regulatory attack by Gary Gensler to appease Elizabeth Warren, because he wants, a political appointment down the road, right? He made a pact with the progressives to, I'm going to lead the war on crypto. And it's very kind of obvious and transparent what's going on.
He's become their attack dog, right? He is Elizabeth Warren's pit bull.
Right. So in spite of all that,
because being the chair of the SEC is a stepping stone for him to another higher political office, which people speculate is to become the Secretary of the Treasury. That's really what we're talking about here.
When you
not
look
talking
at
about U.S. investors, innovation, the economy, we're talking about his own political, personal agenda and ambitions.
So when you look at $45,000 Bitcoin today, and the SEC has brought all of the resources and might to try and sue and slow it down and stop it. And by the way, they're losing. They lost Ripple, they lost Grayscale. They continue to lose across the board because they've been picking these fights, and they're on the wrong side of the law, and they refuse to pass regulation. And so I actually think the SEC's mandate long term is going to be greatly diminished because of the refusal to actually build. Like, the judges are they're just making the law for them. But the point, my larger point here is that Bitcoin is at 45,000 with tremendous regulatory headwind in the US. And it's not sustainable. Like, the headwinds are Bitcoin will far outlast one person's political ambitions. It's way greater than that. But I think if we see a switch to a Republican president, I think you're going to see a much different landscape, a much more innovation friendly. I think we're going to see a lot of repeal or cutback of the regulatory state. And I think that we really America needs a reset on this. It's impossible to do business and build at the speed of innovation at this point. And the internet would have absolutely been killed by regulation if the lawmakers and regulators understood how big it was going to be back in the 90s during the early days of the commercial internet. They would have absolutely killed the internet, but they took a light touch approach, and it was the right approach, and we see what's happened. And the regulators today are trying to kill crypto, and they're doing their best to do it, but they actually can't. That's the beauty of crypto. Like the internet, you could have potentially really tried to limit it, but with crypto, they actually can't. So they're aware of how big it is and how powerful it is and how it disrupts power structures and how it's going to level the playing field. And when you see Jamie Dimon, attacking Bitcoin in response to a question with Elizabeth Warren, it's very clear like what the power structure wants and what they're afraid of, right? They don't like universal access. They don't like the ability to bank yourself with a smartphone and a Bitcoin address. They don't like all the promise, despite what they say, that crypto ushers in. But the good news is that it's way more, it can't be stopped. And so they understand the power, but it can't be stopped.
Yeah, I'd like to say that crypto's made the right enemies.
That's really it's quite an interesting thought. That's fascinating. It's almost kind of like what could have been. Guys, we have a couple questions from listeners. I think Braden's kind of got them at his disposal. Braden, do you want to just relay those over? We'll start with the one about 21 million Bitcoins being reached.
Yeah, absolutely. One of these questions came through a bit earlier. So just talking about limited supply being at 21 million. So if 21 million is reached and there are no more coins to mine to validate the network, what happens in that end state?
Yeah, that's a great question. So miners they earn Bitcoin in two ways. They get the mining reward every 10 minutes. And like Cameron mentioned earlier, that award is going to be cut in half in around April or May of this year. So that supply being dumped on the market will be much less.
It's currently 6.25 Bitcoins every 10 minutes, and that will be cut down to 3.125, I believe, I think around the 21st of April.
Right. So when the miners earn Bitcoin, oftentimes they have to sell it to reinvest in more mining rigs and keep ahead the pace of innovation. It's sort of a arms race, the mining arms race. So the sell pressure on the market when the Bitcoin having happens, the sell pressure will cut in half, which is always, again, usually a good catalyst for Bitcoin. Some people argue that it's priced in, but it always seems to be a catalyst of sorts, a big sort of inflection point. The other way that miners earn Bitcoin is transaction fees. So to send Bitcoin, you have to pay a transaction fee, and ultimately, so that balance of mining reward and transaction fees will pretty much shift entirely to miners earning transaction fees when the 21 million cap is reached. So it will turn into more of a for validating the network and being the network for free. They will just be charging transaction fees, whereas today they earn the mining reward every 10 minutes, but also charge some transaction fees.
And just to timescale that, it's I think by 2140 is when all Bitcoins are expected to be in circulation. So about 120 years from now. And just to put some numbers on it, so at six and a quarter Bitcoin per 10 minutes, roughly $300,000 of value is created every 10 minutes in the Bitcoin network. That's going to cut in half. So assuming the same prices as today in April, that's going to go down to about 150,000. So that the amount of Bitcoin being created cuts in half, assuming miners are selling a good portion of that to fund further operations, that reduces selling pressure. And then, as discussed earlier, ETFs are already accumulating more Bitcoin per day in aggregate than new Bitcoin are being created. That's new as of weeks ago. That buying sort of pressure has never existed in that form. And as I mentioned, it's just getting started. We've never gone into a halvening with that type of buy pressure, that buy and hold pressure from ETFs. And while, the efficient market hypothesis would tell you it's all priced in, it historically never has been. And I think a lot of that, is new entrants understanding like, oh, this is truly fixed. I get it. And then there builds this huge demand and awareness into these cycles.
Got it. Here's an interesting one. Talking about Bitcoin versus dollar. So as Americans, are we undermining our own future by endorsing Bitcoin instead of upholding the dominance of the US dollar? Additionally, is it not the responsibility of branches of our government, Department of DOD, the Fed, to safeguard the dollar's position?
Yeah, that's a really, really fun question. I always view Bitcoin as an alternative to holding fiat dollars. And if you look at gold since the 70s, I think it's up about 26 times. US dollars lost about 95+% of value since the 70s. So giving people an option to store value in something outside of the US dollar, or even real estate, which leaks value over time and is, through property taxes, maintenance, depreciation, all that. It's very important to give people alternatives like hard money. And Bitcoin is just another alternative that we believe is superior to gold and meets the needs and desires of people of today. And so we don't really view Bitcoin like what it does, I think, at least in the short to medium term, is it's a counterbalance, and it keeps people honest. And if you don't like what's going on with the US dollar and you don't want to invest in the government, or you don't support how they're spending the money like a drunken sailor, you put your money into gold or Bitcoin. And it's in many ways, I think, a protest of sorts. You vote with your wallet and you say, you know what, I don't believe in this system anymore. It's not serving me. This money may have worked for boomers, and they may believe in that type of money, that fiction, but that's not my story. I want to go over to Bitcoin. And when you give people alternatives, it creates, I think, better behavior. I think at some point the US will say, wait, we can't just keep adding trillions of dollars of debt. We're losing our ability, for many things. And so I think it keeps the government more honest. I think it keeps I think people are at their best when they have options and choice. And when countries employ capital controls, it's always a sign of weakness, right? It's never a good thing. If the US though continues down its path, they're going to lose sort of being the reserve currency. And I think that, like, while that may hurt the government on some level, A, we're not there and maybe we don't get there, but B, I don't know, like maybe that's just where it's going to go anyway. And it's going to create like a Switzerland of sorts, and potentially a better long-term situation.
I think the best the best way to protect the dollar is responsible fiscal management. Attacking Bitcoin won't change anything, and you can't stop Bitcoin, right? There's no choke point, there's no CEO, there's no company. It's a protocol, and it lives wherever the internet lives. And so to stop Bitcoin, you have to stop the internet effectively. So and people right now, they aren't really spending Bitcoin because it's an appreciating asset. It's sound hard money like gold. And so I don't think it's really competing with the dollar at the end of the day. So that's kind of like our position on it, is like you can't stop this. That's why it's so powerful. So you should work with it. And if you want to protect the dollar, then make the dollar attractive for people to hold and to use and to spend.
Guys, that was super interesting. I think we can pretty much end it on that note. Lot to unpack here. Yeah, it's the sort of geopolitical implications of fiscal spending are quite real. And I guess, the question around when the U.S. will actually rein in the spending is sort of a big unknown. People have been talking about this for the last 4 decades, probably. What's going on with the U.S. debt. But when will it come to a head? I don't know.
Is it true, Divya, that we've run a deficit something like 46 out of the last 50 years, something crazy? So the question is, like, can we stop this inertia?
Yeah, well, unfortunately, there are a lot of folks in government who believe in modern monetary theory, and a lot of other bogus economic frameworks that really do nothing but harm. And we've seen that recently with inflation. I mean, I think for anyone who's been to a gas pump recently, or has watched their own personal P&L recently, it's probably going up, or has gone up. And generally, things don't come down once they go up, as far as consumer goods and services go. So yeah, anyway, a ton to unpack. I think the regulatory aspect of where we are as a country is it's unfortunate, but your comments have been super interesting. So guys, thanks again for sharing the insights. We'll certainly be keep tracking the asset class, and hopefully we can have this conversation again after the election.
Sounds good. Thanks very much for having us. Good chatting, Divya. Thanks, everyone. Bye.
All right, take care, guys.